Hey everybody, welcome to Trading Capital's daily analysis video. It is currently June 23rd, wrapping up the market session here today. What an epic day we had. Congratulations. I'm just going to start this video off by saying congratulations to all the members who have been following our alerts since the start of the year. This is officially our most profitable trading month, or at least Trading Capital's most profitable trading month to date. So awesome job. What did we do today on our natural gas? Natural gas completely broke down again, down on the day, another 8%. And this is what we have been calling with all of these natural gas bulls, pumping it up. Realistically, preaching that there's a war in Ukraine and that's their only fundamental driver, and they have no idea as to how economics work, how the energy sector work, how energy is basically the leading indicator in terms of what economic growth is going to be like. The macro picture is the strongest when you have math on your side and the numbers in terms of an asset class aren't matching up. Eventually the math will prevail, and that's certainly what we're seeing with natural gas today. Had this initial drop, bear flag, another drop, bear flag, and now you're looking to complete another drop. You are coming into support here, so you have these pivot tops, but I do think you still go lower just because you were so extended on the chart. And with potential recession looming, a global recession, not just narrowed down to one country, natural gas could fall a lot lower. But I wanted to bank our KOLD because it was a 10% weighting in our portfolio. And my, oh my, we banked a beautiful profit on that. Despite it only being just over 10% profit on the trade, it was still such a huge weighting in our portfolio that it boosted our portfolio tremendously. So congrats on that winner. We also covered our Chevron short, our CVX, for a beautiful 12.1%. So this month, the energy sector has paid us out handsomely. So if any of you were able to block out the mainstream propaganda, and that's all I heard, I'm in a variety of other investing circles and even multi-billion-dollar hedge fund circles that essentially have been pumping up oil, pumping up natural gas. Natural gas is going to $15 and then to $50. Oil is going to $200 and then $250. This is just ludicrous. There is no metrics or mathematics behind those assets and those energies going to that price. If for some reason it did get to those prices, the system would be imploding. Businesses would be going bankrupt. Companies would be the delinquency rate would be increasing, which would inevitably hurt the demand for all of these energies. So when people are pumping up these astronomical prices, it's just downright drives me crazy because there's no fundamental reason other than the fact that there is a war in Ukraine, but that was priced in long time ago. And if people are still riding the coattails of Russia-Ukraine war, give it up. We're going to go through another cycle where I do believe the energies will have that massive bull run, but it's not until we have a complete cleansing of this cycle. And I do think the recession will overpower realistically any supply-demand issues. So looking at the oil chart here, notice how you had that initial bounce yesterday off of the support line that we had drawn in. Beautiful pivot top, your three pivot tops. And ultimately you bounced off of that, had a tremendous powerful bounce. And look what happened today. Pretty much reversed all of those gains. It wasn't a bearish engulfing candle, but pretty darn close. And I was actually hoping that oil would go back up to this 83 level on the USO to accumulate yet again another short on the USO. So next levels on the USO, this is a technical gap fill. It will be a big area for the price action to fill. You can see it's about 5.8% drop. I do think that happens sooner rather than later. And then ultimately you do have a secondary gap fill down here, which is basically a 13% drop. You will see this hit this level, and then eventually this level down here when the economic conditions start to deteriorate more and more. So just keep in mind, energies are a leading indicator. It could still be an oversold condition that it's being slowly worked off, but nonetheless, we have banked on all of our energy trades. We currently hold no more energy shorts on the market. And after a massive move down that way, if we get some sort of a technical bounce at key levels, look for me to start accumulating yet again more energy short trades. We also added to our LI short today again. It has been a powerhouse, but you are starting to see some distribution signals. The interesting thing is it had a rip-roaring move early in the day, and then even with a strong market push late into the day by the S&P 500, LI Auto failed to take out its highs and continue pushing up. So you are seeing signs of distribution. Another thing we did today is essentially just hedge our portfolio due to the fact that we closed a big short position, which was the KOLD and our Chevron shorts. I wanted to keep more or less our portfolio in a balanced position where we have a balance of longs and a balance of shorts. So TDOC, I am prepared to lose on the trade, but nonetheless, I'll just show you why I did take that trade. So if we just go to TDOC's chart here, TDOC had a pretty big day today. It was up over, I think, 8 or 9% on the day. So it's certainly a big move on TDOC. But if we flip to the hourly chart, you can see why or the 30-minute chart, I apologize, and while my chart just loads. So one of the reasons why I'm taking this TDOC trade is simply if you look on the 30-minute chart, and this TDOC trade is just as a portfolio hedge. I wanted to get a little bit more short exposure to compensate for the shorts that we just covered. And I do think that TDOC has had an impressive move over the last few days. You have broken out of this upsloping channel, and you are on a 1, 2, 3, 4, 5, 6 bar surge time count on the 30-minute chart, so it carries more weight than the 10. You did fill a key technical gap here, and now you are into resistance. You can see, if I give you a little bit of a longer time frame, you have these two trend lines that are acting as resistance, pivot high. Sorry, my chart's just going wonky on me, but pivot high to pivot high to pivot high over here, and you have a short-term breakout. But I am in the camp that the markets kind of can pull back a little bit. Oh, you can see some post-market action kind of just dumping out here on TDOC. So that's the time count working out in our favor, where you're into a time count, you have resistance, multiple resistance points, multiple factors. And this is why I took the TDOC short trade, is just to, again, hedge our portfolio, compensate for the two massive short positions that we closed today for the wins. So we'll just have to continue to monitor that. I am prepared to just lose on this trade for the sake of just having that sense of security at night when I go to bed. Taking a look at the spiders. Spiders had an interesting day. So this is the intraday 10-minute chart. You can see this is where we opened, gapped up, and then essentially sold off in pre-market. Tried making a new high, failed, made a new low intraday, rallied, made a new intraday high up here, sold all the way off, filled this key technical gap, and then you were teetering on the brink of this this move. You were at support, but you were almost failing at support. If you had failed at the support, it favored a move down to this 368 and then eventually this gap fill. So those levels are still in play at some point. But now the fact that you were able to hold this trend line, and look at this trend line, beautiful thing of support where you have pivot to pivot to pivot, and then you ripped up off of that trend line of support. So it's just really interesting to note. But if we flip to the larger time frame again, this is still our Fed channel that we're consolidating in. We've had these two red lines on here for quite a long time, and you can clearly see it's been acting as a major area of support and a major area of resistance. But we're slowly trying to bubble up and bubble up and bubble up, and the more times we hammer on this resistance line, it does favor a break to the upside. And what's interesting is if we flip to the 30-minute chart, we do have this inverse head and shoulders or cup and handle formation occurring. Now, it's still kind of premature. You have not broken out. Let me just remove these lines just so we see it easier. But essentially, this is your left shoulder, this is your head, and this is your right shoulder forming over here. And the area to watch is this over here. So you really want to take note. This is your neckline. We were trying to bubble up and break. You see we had a 30-minute close above this level, but then we've failed to confirm and we're right back in. But this head and shoulders is still in play. You really want to see us hold this level, this 372, 373 level, for this right shoulder to still be intact. And if it does break up, it has a pretty big move up to the 390, 391 area, which would fill this technical gap. So that's definitely something we're keeping on the radar. If we flip to the daily chart on the S&P 500, let's just take a look to see what is transpiring here. You can clearly see we've had a little bit of a positive day. There was a bunch of whipsaw action today, but overall the S&P did finish up just under 1% on the day. So it's good to see that it is positive for us. That being said, I still favor a move to fill this gap at that 387, and that would correlate with that intraday inverse head and shoulders pattern that we're watching. So that's going to be key. If it breaks out, it does favor a pretty strong move to the upside, and it would happen fast. Let's take a look at the NASDAQ QQQ. So let me just take a couple of these lines away. So you can see the NASDAQ is testing, again, resistance up at this pivot. The interesting thing is how we were talking about, you were hammering on this parallel channel over here for one day, a second day you closed below, and then you were kind of consolidating. And today was the final day where you actually closed back with inside this parallel channel. So that's super bullish for technology. Really, really good to see. The Qs were up 1.49% today. Gold is interesting today. You know, despite people saying gold's been doing nothing, it's still the best performing asset of 2022. Now that energies are starting to roll over, I think energies are still slightly up, like the XLE ETF. But nonetheless, I do think gold will remain the strongest asset in 2022. Even if it doesn't give you much gains, it is doing what exactly it's supposed to do and preserving your wealth. But it is a sell day for gold, down 0.68%. You can see this candle. You're still trading inside this wedge pattern. And you can see you have a pivot here, your pivot zone over here, another pivot high here, and you have a series of higher lows here. So you have one pivot, two pivot. As long as we keep extending upwards along this lower part of this wedge pattern, it does eventually favor a move continue to break up. So that being said, I think gold was under pressure today because the US dollar saw some slight positive, and this could just be algorithmic trading. Generally, whenever the DXY is positive on the day, gold does see a sell-off. But it's interesting to note that gold is under pressure today. But again, typically when the equities rally, gold generally also sells off. Let's take a look at silver, because we do hold a silver position at the moment. I know we're slightly out of the money on our SLV trade, but that's okay. I have no qualms accumulating more and more silver. So notice how silver is still stuck under this massive resistance point. This is going to be your big point to break out of this downsloping trend line over here, this yellow one. And then ultimately, I do think silver is now, since you've broken this 1, 2, 3 triple bottom zone, I do think it's favorable that you do test this previous high here in 2019. That was kind of your original breakout point, and this is what they call a retrace back to the breakout zone. So that would make sense on just a pure technical basis. A retrace back to the original zone where you broke out of cleanses all of the bulls, and it basically gets a lot of people bearish right before it starts ripping up. And obviously silver does have the industrial demand lagging it with a slowing economy. If you break through that 1970 level, there are another key pivots down here. You can see pivot to pivot to pivot, another pivot over here. So there's tons of support in and around this 1965 area and 1869 area that would be great levels to start accumulating at. I just want to see if there's anything else on the radar that we need to touch base on. I'm not really seeing. Oh yeah, we did do another trade today. We started going long Mosaic. So the interesting thing is I'm not really ever in love with any specific company. I'm never really in love with any specific sector. I read the charts. If the charts are telling me to buy, I buy. If the charts are telling me to sell, I sell. So that's kind of the emotion that you have to remove. But flipping to the weekly chart on Mosaic, I remember we were shorting Mosaic up here at the high, And then I do think we covered it and re-shorted again over here for this epic collapse. Could have squeezed a whole lot more out of the trade, but nonetheless, it certainly has paid us on the short side twice already. But now we're looking to go long. And one of the reasons I wanted to pick up here is you're on this 4-week selling side pressure with this massive down day today. Over 9.57% down on Mosaic. And this is again that war trade, that one of the reasons why it was doing so well. But again, if you look at Mosaic, you're now coming into this massive level of support. You have your pivot to your pivot in 2018, another pivot high over here, another pivot zone over here. This is your breakout area. And now you're approaching that level very, very closely. And then when we throw in the 50 MA, I want you to take note. Look what we just hit on a weekly basis. We just hit the 50-day moving average. The last time we tagged the 50-day moving average was back here in November 2020, and we haven't tagged that since. So essentially, this is now a multi-month level or a multi-year level of support that you are into. It is a starter position in the event that it does go lower, but I do think we are in a position now, getting in an oversold condition in a quality company that will have that mean reversion bounce. To think that this stock was trading at 79 basically at the mid-April, and now it has fallen all the way down 43%. That is truly, truly epic. It provides so much opportunity as traders and swing traders, and we're certainly going to seize as many opportunities as we can moving forward. So tremendous, excellent job. Again, this is just a starter position. I do have secondary and third and fourth levels that I will accumulate more on this trade in the event that it does go lower. But amazing job banking all the profits. Again, most profitable month for Trading Capital and members to date. So give yourself a round of applause. We still have a beautiful 6 months in this year to essentially try to double the gains and replicate what we have done thus far. And the beautiful thing, I think it's really, really possible to do that because the volatility isn't going to shy away. As we get to these more oversold levels, it's going to favor those technical charting abilities to read the charts. Where are people accumulating? Where's the money flow happening? Where's the distribution signals occurring? Where's the accumulation signals occurring? And that's ultimately going to give us an edge to keep taking profitable trades and position ourselves on the right side of the market. So well done, and congrats once again. But I'm going to end this video on that note, and we will see you tomorrow with wrapping up the week. And please give this video a big like and a share down below or a comment down below. But amazing, amazing trades. This is the environment that we live for and sleep, breathe. I mean, this is epic, epic. 2022 is going to go down in the history books. And the fact that we are making money in the most difficult environment is truly, truly exceptional. Thank you all for being subscribers and members. We will see you on the charts tomorrow.